about 11,540. That's about 6 points higher. Sensex starts 38 higher.
12 points on the Nifty. 11,544 is where we're at. The market's absolutely quiet. I mean, the only thing which has moved is the mid-cap index.
The Nifty is up 1 point. The Bank Nifty has made a move, though, back to all-time highs.
On the mid-cap screen, today was a day of profit-taking. There's no denying that. The index is down about 86 odd points.
The Sensex ends marginally in the green, even as the Nifty snaps the 7-day gaining streak. Mid-caps underperform benchmark indices.
All hope is not lost for Jet Airways, says State Bank of India Chairman Rajneesh Kumar, as lenders consider replacing Etihad with a new investor. Naresh Goyal is believed to have reached out to Qatar Airways and other potential investors.
Nifty Bank in top gear ends close to 0.25% in the green, pulled up by HDFC Bank and Yes Bank. Kotak Mahindra also contributes to the gains.
The rupee comes off its 7-month highs, sparks a rally in IT stocks. Infosys and Wipro lead the charge. Oil marketing companies, on the other hand, loosen trade.
Two-wheeler makers confirm there is a sudden slowdown in the sector. Bajaj Autos Rajiv Bajaj says that inventory levels for some products have touched alarming levels of 100 days. Adds that some companies will have to cut production by 50% this month. Well, those were the top 5 headlines from Dalal Street on a day when the bulls probably met a little bit of resistance in the mid-caps and a little bit at the Nifty index level. But otherwise, the going is still strong. Hello and welcome to Markets Today Talk Back, the show where we tell you everything that happened in those 6 hours of trading in 5 headlines. I'm Lata Venkatesh. With me, my colleague Prashant Nair. Hi, Prashant, looking resplendent in your holy gear.
Oh, both of us. And we were matching, I think. No?
Yes, color coordinated.
Okay, so as Lata pointed out, over the next 30 minutes, we will talk about what really mattered, the stories, and of course, we'll take your questions as always. We have Gaurang Shah and Mitesh Thakkar, our guests today, on the fundamentals and the charts, to take us through what really, to take us through their views and, of course, answer your questions. But as always, we spend 2 minutes looking back at what really happened and what went on in those 6 hours of trading. Lata.
Well, there was a global weakness to start with, probably ahead of the FOMC's decision, and toing and froing on the China-US talks front. For whatever reason, there was a bit of a pause in global markets, and finally, the Indian bull also paused for breath. The flow of liquidity hasn't stopped, but people are probably just reassessing ahead of a holiday tomorrow as to whether more money needs to be poured in. So resistance came in at around that 11,520 mark, where we saw resistance earlier this week as well. Though, of course, it went very close to, 600 levels and then came back to that point. It was in the mid-cap space that you saw greater resistance, but still there's no holding back on the financials. Even though you saw weakness in the rupee, and a little bit of increase in yields yesterday, nothing is holding back. Bank Nifty is continuing to charge ahead, and because of the dollar weakness, rather the dollar strength and the rupee weakness, IT stocks also joined the party. So party is on, only some people are kind of catching their breath. Was that your feeling?
Absolutely, Lada. And I think more people are waiting for dips, but the dip is coming, but then disappears very fast, right? So I think today the same thing panned out. Let me just quickly tell you what moved up and what moved down, sectorally speaking, and then we can get down to stocks. Real estate did well, IT did well, as you pointed out, and there was PSU banks, I mean, actually, which came out from behind because it was private banks like HDFC Bank, Yes, etc., which were doing well at one point, but then by close, PSU Bank index was up 0.5%, nearly 0.5%. Under pressure, there was media, which was under pressure, largely thanks to Z, which was selling off. Autos has had a bad week so far, and energy as an index, I mean, upstream, downstream, everything cracked. So let's come to stocks now. Large caps, Nifty. HPCL, led the losses, down about 5.5%. Z was down 5%. BPCL was down 4.5%. NTPC, ONGC, IOC. I mean, actually, the other thread through most of these top losers in the Nifty is that they're all PSU names. I mean, just sort of talks to the sectors that they come from, mostly resource companies. The gainers in the Nifty came from Indiabulls Housing, went from strength to strength, 5%. Infosys was up 2 1/3. HDFC Bank was up about 1.3. Yes Bank was up, and Dr. Reddy's was another name which was higher. The broader market gains, PNB actually it shot up a little bit after news that Mr. Nirav Modi has been arrested in London. 93 plus. Interglobe had a big day. Look at that, 7.33% on Interglobe. Vodafone Idea was up about 3.25%. DLF, Godrej Properties, Oriental Bank of Commerce, India Bulls Real Estate Prestige. I mean, real estate generally has been doing pretty well. And, there are three of these names, DLF, India Bulls and Prestige, that I mentioned as part of the broader gainers list. Broader losses, Jubilant Industries, there was that block. Jet Airways was down sharply. NBCC, NMDC was lower as well. And so were stocks like PVR because of some news flow. And Dilip Bilcon, which has had this breathless rally, which gave back some of that. Lata.
Oh, absolutely. Thanks a lot for that, Prashant. Well, let's first find out where the Nifty is headed, and then we're going to discuss a lot of sectors. Mitesh, that question squarely to you. Do you think that higher highs are just round the corner?
I think so, Lata. We'll definitely see higher levels from here. This rally is definitely overstretched on the intraday charts, but on the daily and the weekly charts, the momentum indicator remain rising. I think today we got first signs of, intraday indicators kind of turning flat, which means that we are in for at least a time-wise correction, if not a big price-wise correction. So my early feeling is that 11,420 on the downside, about 11,550, 560 on the upside could be the range, which the market might take a breather for next 2 to 3 to 4 sessions. In that, I think, in case you get those dips to around 11,450, 40 odd levels, that will be the best entry point. But I think eventually we will look at testing all-time highs of 11,700 to about 750 on the upside.
Okay. Wow. All right. 11,760, the prevailing all-time high. Second headline.
Jet Airways is the top story. Lenders are scrambling for funds after foreign partner Etihad hinted at essentially exiting the debt-ridden airline. Sources suggest that banks will look to replace Etihad and might ask Etihad and Naresh Goyal to actually pledge their shares, essentially bring in more money into the airline. The stock fell close to 5% in trade. Ritu is joining in with more on the latest in terms of what the lenders are planning and what they can do from here. Ritu.
With Etihad indicating its desire to exit from Jet Airways in the event that no agreement is reached between Naresh Goyal and Etihad Airways, now lenders are in a scramble to figure out where the funds would really come from, and we're given to understand that lenders are looking for a new investor to replace Etihad Airways in Jet Airways. Do remember, Etihad Airways currently owns about 24% stake in the airline, and with Etihad not bringing any fresh funds and also looking to exit at 150 rupees per share, as we had reported earlier, banks are hopeful that some of the investors that had done a due diligence on the company earlier could perhaps now step in and take up Etihad Airways' place in the airline. We're given to understand that this new investor that banks are looking for now will be in addition to NIIF also picking up about 20% stake in the airline by pumping in about 1,600 to 1,900 crore rupees. But talks haven't been concluded on either front yet. Banks are also discussing a plan B where, in the event that no funds are available and no new investor comes in, banks could give additional funds to the airline on the condition that Naresh Goyal and Etihad pledge their shares in the airline to the lenders. So these are all plans that are under discussion right now. The lenders have to meet in the coming few days to finalize clearly what they have to do for the revival of Jet Airways.
Thank you very much, Ritu, for that. But the man in the cockpit at this point in time, if you please, SBI Chairman Rajneesh Kumar was ambushed by reporters after he met finance ministry officials. So just listening to what we could get out of him.
IBC means that we are grounding the airline. So we will try till such time we believe that all hope is lost. But as on date, I can say that not all hope is lost. So we have not reached that decision point where we say enough is enough and nothing can be done and let the airline be grounded.
What is government's direction to you?
Government's no direction. One thing you have to understand, I dislike this word. We are bankers. We know our commercial interest. It is our duty to keep the government informed. There is one unanimous view that till such time all hope is not lost, effort should be made to keep the airline running, and everybody believes that Jet Airways is a good aviation property.
So when we see Etihad moving out,
Etihad, try to read their statement, that try to understand the situation. There is on one hand one partner, there is another. right? And if both cannot arrive at a consensus, we are, and what is lenders or our interest? Our interest is in Jet Airways. Our interest is not in the promoter. Our interest is not with this any other partner or this. They will take decisions based on their assessment of the situation. But the dialogue with Etihad, I can tell you, is on.
Okay. Well, we should have played a previous bite as well of Rajneesh Kumar, where he explained most importantly why an IBC process doesn't help is that it is a service industry. In a manufacturing unit, there are assets, plants, inventory and equipment. But in a service industry, you have only people and you have leased aircraft. So the IBC process really is not very helpful, and so they have to kind of try to hit the ground running in terms of a resolution, literally. But at the moment, grounding is more than taking off as far as the airline is concerned. Well, there are lots of questions over here, Gaurang. I would just want to tell you, how would you play this? Do you buy Jet at this juncture in the hope that everybody is trying to revive it? Or do you think you just go ahead and buy Indigo or SpiceJet?
Well, thank you, Lata, and good evening to all of you, and compliments for the Holi season. Wish you all the best for the Holi as well. Well, the problem, Lata, is that there is absolutely no clarity, point number one. Point number two, on the fundamental side, we don't have any coverage on Jet Airways or SpiceJet, and the only company that we cover in the aviation sector is Interglobe Aviation. The other issue is, how big is the hole to get filled up in terms of the funding? And as we all know, keeping an airline company in the sky requires a huge amount of capital. There are also, news flows that the pilots have decided that possibly from 1st of April they will go on strike. Even the ground staff union has spoken in favor of certain strike, etc. So there is a lot of, clarity that one needs. In that kind of an atmosphere, well, I think it is only prudent to go with known names. And to answer your question, I think Interglobe Aviation, Indigo would be a preferred bet.
Okay, Indigo will be a preferred bet in the market. I guess agreed was up 7. Indigo was up 7% plus, as I pointed out earlier, 1,424 at close. Well, we move on to the third story of the day. The Nifty Bank was in top gear once again today. The index ended close to about 0.25% in the green, pulled up by both private sector and PSU names. Private sector banks like HDFC and Yes, both of which gained over 1%. Kotak Bank also contributed to the gains. But let's also pay attention to what happened with Axis. It had its analyst meet yesterday. The stock saw some profit taking, remember, but it's already had such a decent run. Abhishek Kothari is joining in with essentially what the key messaging was from the management to the markets. Abhishek.
The key takeaways from Axis Bank analyst meet are they are targeting a profitable growth on account of improvement in the cost-to-income ratio and normalization of credit costs or provisions for NPA. So they are targeting a return on equity of 18% by FY22. They'll not lend to infra portfolio as they are doing a rejig or bringing down the risk profile of the corporate portfolio. However, they will continue to grow the retail portfolio, especially in the unsecured high-yielding book. So profits and potential warrant conversion can actually keep the bank well capitalized over the next 6 to 12 months, and they will not need capital over the next 12 months. Brokerage are bullish on the stock given the fact that Nomura has raised the target price to 900 from 850 and Motilal to 875 from 850, and across brokerages like CLSA, Deutsche Bank, Nomura and Motilal, we have a buy recommendation on Axis Bank.
Okay, thank you very much for that, Abhishek. There is a caller, but not on Axis. This one is on Yes Bank, actually. MKP Nambiar from Kerala is calling us with a question on Yes Bank. Mr. Nambiar, go ahead.
Hello.
Yes,
I am
sir.
holding about 500 shares of Yes Bank at the rate of 225.
Okay.
It's an average price, 225. Then I can hold it another 6 months.
Okay. You want to hold it only for 6 months. You're not a longer term investor.
I can hold it minimum 6 months.
Okay. Okay. If it is 6 months, then I guess, Mitesh, your call?
Yeah, so Lata, I think, he might not make big profit, but just might get his cost back. I think the stock is definitely now confirming a medium-term bottom around the 150, 170 zones. And I think on the upside, we were looking at 250, which has been tested, but I think 280 can also happen, which is as good as this price. So I think try and exit around those levels and switch it to something else.
Okay, medium-term uptrend to exit at about 270, 280 levels is what Mitesh is saying. I hope that answers your question, sir. Thank you for calling in. The lows, broader markets, though, a bit sluggish as compared to the frontline indices. We got through 3 of the top 5 headlines. Let's move on to the 4th one. Rupee came off its 7th-month highs in late trade. This movement sparked a rally. Indices and Wipro led the charge there. Oil market companies, on the other hand, lost in response. HPCL, BPCL, IOC all lost anything between 2 and 6% in trade today.
Okay, we have got a question on IOC, the stock that lost today, partly because crude is higher and, of course, the dollar is higher. Hans Kumar from Kolkata has written in. He has been holding 2,000 shares of Indian Oil, IOC, purchased at 400 rupees for 2 years. He says he's a long-term investor. Wants to know if he should hold or sell. My God, that's a long way. What does he do, Gaurang?
It is definitely a long way. And my sense, Lata, is that the near-term crude oil prices can stay a little bit elevated with the sanctions from US on Venezuela and, of course, the production cut in OPEC. So maybe you might see a little bit elevated. Importantly, we had a good strength exhibited by the rupee against the dollar, which of course translated into weakness. Both these factors play a negative role for oil marketing companies. First of all, we have a positive coverage on all the 3 oil marketing companies. And if you have investable amount and your time horizon is maybe about 2 years plus, then you can possibly average at lower levels.
Okay, we got one more question. Mahendra Patel from Gujarat has written in with a question on Infosys. He's been holding 15 shares of Infosys. His cost is 1,165 rupees a share. Wants to know whether he should hold or sell. Mitesh, what would you tell? What would you say about Infosys?
See, I think the prices adjusted or before the dividend, the bonus, I think, which came in. So because this all-time high for the stock is 770, which was met last month only. So I remember that very well. So I think the stock is very close to his buying price as well. I think 765. I mean, if you divide by, make it 2 by 3, I think it'll come to about 750, 760 zones. So I think he should hold on. I think there's no reason for anybody to worry about holding Infosys. I think it might find some supply on the 750, 760 zone, which is the all-time highs. But I think eventually 850 is what I'm looking at if you give it about another 2-3 quarters from here.
All right. Well, with that, gentlemen, we're going to go to the last headline today. Two-wheeler stocks continue to be under pressure after automakers confirmed a big slowdown practically since October. It is now facing production cuts as well because of the inventory pile-up. Bajaj Auto's Rajiv Bajaj says that inventory levels for some products and some companies have touched alarming levels of 100 days. Take a look at what he had to say. It was a candid chat.
Inventory for some is actually, I think, in triple digits, 100 days or more. They may or may not acknowledge that, but that is the reality. And in terms of production cuts, typically I hear of some of the big makers effecting about a 20% cut. And don't be surprised if on 1st or 2nd April you find out that some of the big ones have cut back by as much as 50 or 60% in March.
Next year, certainly you see the impact because the price differential between Bharat stage 4 and 6, there's a difference of about 6,000 to 7,000 rupees, as what Rajiv is saying. And there is going to be an impact as far as the customers are concerned. And you'll see both the vehicles in the market in the month of, say, I would say September, October, November onwards. So there would be a comparison and people would actually make a choice there. So you'll see a lot of buying there. And I see a growth in 20. And I think we should be around 8 to 10%. That's what I would estimate as far as two-wheelers are concerned. In the car industry, I would also estimate around 6 to 7%. That's what we have factored. So we are targeting almost 20% growth next year. This is our as per our own budget.
Even if we see from industry perspective, while the second half has been broadly 8 to 10% lower, we have been able to maintain our revenue. And going forward, we are all echoing what the customers are saying, be in terms of four-wheelers or two-wheelers, that up to June, at least there are no signs of strong revival. We are tightening our belts. The focus is mostly on quality, delivery and development. We have been trying to withstand this tough time. We all know that the long-term story for the country is intact. We are very heavily, I would say, not that extent of penetration in terms of four-wheelers. So we believe that four-wheelers may actually see more growth going forward as compared to two-wheelers.
Okay, there is lots of opinion coming in from both OEMs and auto ancillary companies. We've got a caller now. Ravi Chetri from Delhi is on the line with us. He's got a question on Ashok Leyland. Ravi, thanks very much for calling in. Tell us your question.
Hi, I actually hold Ashok Leyland at the rate of 111. Okay. I have 160 shares. And recently I want to buy the shares at the rate of 90. If you can suggest, I want to hold for 3 to 5 years buy.
Oh, okay. Gaurang, yes. 3 to 5 year buy, is this a good time to average lower?
So Lata, I hope Mitesh will agree with me. 80 is a very strong floor for Ashok Leyland and the stock has been there a number of times. We remained extremely positive on Ashok Leyland for a very, very long time. And after the recent rally that we saw in Ashok Leyland and then it corrected, I think it's been consolidated between 80 and 100. You have a 4 to 5 year time horizon. I think by that time, a lot of concerns which are over clouding the auto sector would possibly be a thing of the past. And by that time, you will also have the scrappage policy coming through in terms of clarity for commercial vehicles, which will again propel the demand on the higher side in terms of replacing the old commercial vehicles with new ones. And you have stronger fleet demands from e-commerce verticals, etc. So we remain positive, and if you do want to average, possibly sub 90 would be a very comfortable zone to average Ashok Leyland.
Okay. Well, there was another stock that was on our radar today, and that was Vodafone Idea, one of India's largest telecom operator, going by its subscriber base. It is planning to raise up to 25,000 crore rupees by issuing fresh equity shares to its shareholders at a 60% discount on a rights basis, of course. The stock ended the day 3% in the green. I mean, it's a major debt equity rejig. The telecom major's plans to reduce its debt over 1.23 lakh crore, 1,23,000 crore, that is by issuing this 2,000 crore of new shares to its existing shareholders at 12 rupees 50 paise a piece, appears to have at least found some positivity in the investors today. Actually, we have questions, but out of time. So, Mitesh and Gaurang, thank you very much for joining us on this festive day.
Absolutely, and wishing all of you a very happy Holi from everyone here at CNBC TV 18. Thank you for watching. More coming up on the other.